All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even life advice.
Michael Saylor retweeted this protocol like 4 times this week. It's not a Bitcoin thing. It's a DeFi protocol. What is basically like a yield product that help him continuously fund its strategy, MSTR. I've put this together, trying to make it easier to understand for everyone. Before explaining APYX, you need to understand what is MicroStrategy and what is STRC, because this is what APYX is built on. So Strategy Inc., that used to be known as MicroStrategy, as well as MSTR, it's basically a Nasdaq listed company that holds Bitcoin as a leveraged Bitcoin bet for speculators. The whole playbook is continuously raise money, buy Bitcoin, and hold it. But the problem they have is, how do you keep raising the money without diluting your common shareholders, the MSTR holders? And this is where STRC comes in. It is a perpetual preferred stock. Think of it as like a bond that never matures and continuously pay dividend forever. So people who think Bitcoin is interesting, but they don't want to hold Bitcoin as a value, but they don't mind earning yield of Bitcoin. It's a bit like, I don't want to buy a house, but I don't mind investing some money to get the rent return, given my money is the same. So it's like renting people to buy Bitcoin while getting some sort of like profit share or lending rate, basically. So the par value is basically $100. Dividend rate right now is 11.5 annually. Typically paid in monthly in cash. So you can imagine it as if you hold 100 shares, around 10 grand, you'll be getting around $96 a month. But here's the clever part. STRC isn't just a yield product. It's how strategies continue to buy Bitcoin. So when STRC shares at above $100, strategies will issue more shares. Investors will buy them. Strategies will take the cash and buy the Bitcoin, meaning there's no dilution in MSTR. When STRC drops below $100, they raise the dividend rate to attract more people to buy. So you can imagine, like, let's say it's $80 now, then suddenly the return will be something like 18%. Then suddenly it's a good risk and reward for a bond, assuming you think Bitcoin is not going to go to zero. In that way, the price is self-recovering. It becomes a flywheel. So in 2026 alone, STRC funded purchases about 77k number of Bitcoin. That's almost 10x more than US spot Bitcoin ETF combined. Like, let that sink in. But here's the part where most people skip as well. It's a good flywheel, but it also works in the reversal. So if Bitcoin crashes hard, MSTR will drop, confidence will drop, STRC will drop below $100, and will there be enough people to buy this STRC, because some people might not believe Bitcoin will ever come back, right? So STRC traded as low as $90 at certain part, and the dividend in the economy too, it's not a legal guarantee, right? It's more like if it goes up, they will raise the yield rate. So they might delay it. They can also, like, STRC can also delay it. There's some trust factors into it, but like if you believe in Saylor, if you believe in Bitcoin coming back, it suddenly becomes a very high yield generating product, right? Right now, STRC is trading around 99.75, just below par. Dividend is already at 11%, so if it drops more, the dividend will go up, supposedly. But yeah, just keep that in mind, because that's the underlying yield-bearing assets that actually drives what APYX is. So yeah, let's talk about how APYX actually works. So what APYX actually does is APYX takes STRC and wraps it into a DeFi native tokens. The protocol basically buys shares, holds them off-chain via custodian, and issue on-chain token representing its value. But there's 2 tokens, 2 layers with 2 different purposes. There is APYX and there's APYUSD. APxUSD is the dollar layer. It's basically a synthetic dollar backed by the preferred stock asset plus a cash reserve, designed to trade like near a dollar. Here's the thing about apxUSD though. It earns 0 yield. By itself, it just sits there. The only reason why people hold it right now is for points farming for future airdrop. Without that incentive, There's no reason to hold APXUSD over USDC. And for APYUSD, it's where the yield lives. You deposit APYX into a vault, then you get APYUSD back. It will get yield from the actual dividend preferred share. The current rate is around 13%. The exchanging rates go up over time, a bit like wstETH. When you put your money into APYX protocol, they use the money to buy the shares, get the monthly dividend, and then they'll use the money to fund the USD vault, and also build the protocol reserve. Like every stable coin, you have to make sure it keeps its peg. So how does APX keeps its peg? Is using through a few things. First is over collateralization, whitelisted market makers for arbitrage, and also they have a cash and treasury buffer in case anything happens. And then they also trust the assumption of STRC's own peg mechanism will continue to keep the peg. I've put the details here, but I'm sure if you're watching this channel, you already know how it works. I'm happy for you guys to DM me to ask me how the detail works as well. The main thing is if you were to deposit APYUSD vault back to apxUSD, there's a 20-day cooldown period. Obviously, this allows buffer for the team to make sure the peg is okay, and at the same time, but as a DeFi unwinding or leverage position, this is something you have to be aware of. So let's talk about the speculation part, the Saylor Connection. The reason why I looked into this protocol is because this is in Saylor's best interest to push a DeFi protocol that helps him raise money to add another layer on his MSTR. APYX is currently the largest on-chain holder, holding 130 mil, over 1 mil shares. They voted in favor of semi-monthly dividends, which is double yield frequency. They're positioned strategically into Saylor's capital structure. On top of that, Michael Saylor have been retweeting them, so I'm assuming their incentive is aligned and Saylor is pushing them. Does that mean when the token comes out it will be beneficial to them? I don't know, but it's something worth doing, right? And 13% yield is not bad. So yeah, let's start looking into the points game. Is this worth farming? And also the risk after, right? So typically when I farm a protocol, the first few things is I look at the tokenomics and the potential FDV. For APYX, it's quite clear. They have a fixed supply of 100 mil. 5% goes to season 1 farmers that ends in 22nd of May. 4% goes to season 2. There's no VC allocation and team vests over 4 years. Based on that, I work out what are the potential FDV that I think. Bear case is 30 mil, bull case is let's say 500 mil, and if when they launch a token it's very high, maybe 1B, I don't know. Depending on how you see it, this is some of the APR that you can potentially get, assuming the TVL is similar. My bottom line is around 13% is the yield. How much more can I get, right? Because essentially, if we go back here, right? If I favor for points and take APYX USD, I'm not getting yield, but I get more points boosting. But if I put it into APYUSD Vault, I'll get approximate 13% yield. So you have two options, right? Either you take the 13% yield and just be happy about it, and maybe some points at the start. Then, or you be like, hey, I don't want any yield. I want to full speculate on the points for an airdrop, depending on how you want to do it, right? So here are the current multiplier breakdown, depending on what your strategy is. Do you want to be full point speculation, full yield speculation, or half and half? You hold APYX for 10x points, you commit APYX for 20x, or blah blah blah. I'm not going to cover everything. Feel free to go through. Obviously, and I'll put the risk here as well. I think this is very useful to get a framework, and yeah. So let's talk about afterwards. Let's talk about where are these assets on chain right now, because that'll help us understand the risk a little bit more. So right now, well, not right now, more like a week ago when I did the research, and if you want to check out my tweet to get more updated news, that's where you can find me. Right now, where they live, it's 270 mil TVL, around 60-70% of TVL, it's a Pendle, 15 to 18% is at fix, giving out these points. Fix is around 15 to 18% yield right now, so you can imagine people are pricing the points around, let's say, 13% plus a bit of a discount. So people are pricing the airdrop for around 5% right now. You can also put in curve, Morpho to loop, etc. Again, all the details are here. I don't want to bore YouTube guys. Alright, let's talk about the risk, the part that you should care about if you want to put serious money in. Alright, first off, this is basically a centralized product, okay? Like, you give money to some company, the company holds your money and buy the asset for you. So first off, there's smart contract risks. A hacker can drain the money on chain, and then how they're going to redeem it afterwards, or how they're going to try to fulfill with the treasury is a risk. Custodian failure, let's say, I don't know, APYX guys suddenly be like, hey, fuck you, I'm done, I don't want to do this anymore, you guys can't redeem shit. Like, that might be a potential problem. There's also like regulatory risk where they have to hold this, they cannot redeem the stake, etc. And also smart contract risk, which is the worst case. For example, like there's, as you may know, there's a bunch of like money on chain right now, which is like on Pendle, Curve, etc. If any hacks happen there, some part will get drained out, and then that's how the protocol will react and how they're going to fulfill the loss. These are some of the key risks. In my opinion, it's actually not bad because Saylor retweeted them. There's some DD. Obviously, you can do more research in the team as well. So I think the team risk is fine. Second bit is the smart contract risk in terms of minting and redeeming. That sounds scary, but at the same time, because no matter how much they redeem, right, the max they can drain is what the money is on chain, and they can kind of technically like do a whitelist mint. They can do a whitelist redeem for the money, so it's relatively safe. Like at max, they might be losing like 20% or 30% of the whole protocol, which somehow they can kind of fulfill the whole maybe. But hey, DeFi has been going through some hard times lately, so I wouldn't be too. I don't want to say something and like bite my own ass later in the future. But if you want to read the detailed risks here, I wrote everything in the Substack article. Feel free to check it out there. So what's my take, right? Like, genuinely, it's more a interesting DeFi and real world asset bridge. I like it because first, Saylor endorsed it. Secondly, it is a Bitcoin-like product. Third, it's a yield-generating product where it fits multiple people. It touches the RWA narrative. It touches Michael Saylor. It touches yield farmers, and also it's a speculative angle to the future of DeFi tokens. Like if I tell you in the future, be like, hey, DeFi can't take over like TradFi, but it's using as a gate rail to help support a certain TradFi product, like the underlying. This is interesting. But in the end of the day, it's still only 3 months old. It's a fully centralized product with a team that is not very publicly facing right now. Untested during a drawdown and how they handle like potential small hacks or risks like that. And APxUSD has no organic demand outside of points right now. You don't know how can they execute as well as the Athena team for USDE. And yeah, but like this is it, right? Like risk and reward. Like you wish you farm Athena in the first season as well. So yeah, FTV expectation is realistic, but I think it's a good farm in general. Like if you don't trust it, PT at 18% fixed yield is a good thing. Right now, I'm farming half and half. So I get like some yield to justify my capital efficiency cost, as well as if there's some airdrop, hopefully I'll get it as well. But yeah, I think this is an interesting play. There's a few more STRC wrap protocols that I want to share as well. So yeah,